Yeah, what happens is when you set yourself up as an S-Corp, if you don't give yourself a payroll, if you don't give yourself a W-2, the government will take all of that money you've earned. It's just like self-employed income. Even though you're an S-Corp, you're going to take that $100,000. That's all going to be subject to self-employment tax, which is 15%. All going to be subject to federal income tax. All going to be subject to state tax. Now, if you issue yourself a payroll, it's a little bit different, because you can say, yeah, I'm just giving myself a $40,000 payroll. Then we lowered the self-employment portion of the tax. It's only 15% on 40,000, which is more like 6,000, instead of 15% on 100,000, which is like 15,000. So one of the biggest things we can do is we can adjust your employment tax. So whether you're a sole proprietor or an S-Corp, if you're not working with an accountant, that can happen. Now with an S-Corp, you paid yourself $40,000. That's taxable income, subject to self-employment, federal, and state. The other $60,000 is still taxable. It's going to be subject to federal income tax and state income tax, but you're not going to pay the self-employment tax on it. The way I do it with my clients is we set up a once-a-year payroll. Once a year, we're going to pay yourselves as business owners. So what we can do is, people are saying, hey, you're supposed to be paying in during the year, you're supposed to be making an estimated payment. I don't know what my debt's going to be. I don't know how much I'm going to owe, right? So I might get a refund, I might owe money, I might get a penalty. Well, the good thing that the IRS has is the IRS has a provision. It's called a safe harbor. And what we can do is we actually meet with clients 4 times a year, and we do their taxes, we project their taxes, we estimate their taxes, we do their taxes in advance in June and also in October. And we're getting an estimate for what your overall tax liability is going to be. As a business owner, you're maybe figuring out how to get them to a separate account. And then we do your monthly payroll. You do your payroll, we do a withholding for all your federal tax, for all your state tax, and also for all your income tax. If you're an owner of a company, you can pay yourself once a year. If you've got employees, you have to pay them once a month or twice a month. For owners of the company, officers, and owners, we can set up a once-a-year payroll where you can hold on to your money for the entire year, frees up your cash flow. So instead of giving the government all that money during the year, you hold on to it until December, and you just paid it all in December, no penalties, no interest, nothing, and you get you satisfied.
And if you happen to be a business owner earning about 100,000 or maybe even more than 100,000, and you're finding that you don't have enough money to pay your bills, feel free to hit me up. I'd love to talk to you about how you can keep more money in your own pocket and perhaps pay a little bit less to Uncle Sam.